Good afternoon. This is Anka Metcalf with TradeOutloud.com. Welcome to the weekly wrap-up for the week ending May 19th. It is 1:15 p.m. Eastern Time, and we're going to begin the wrap-up with today's price action. So today we had option expiration. The issue with option expiration trading is that the prices tend to be pinpointed at certain values, at certain numbers. So after this overnight session, we did have the price topping out at 20,700, and then we did have a quick little rally that we had into the 42 area. So you could see it right here. First off, let me begin by saying that we did have an issue with Twitter this morning, and it's not us, it was the entire Twitter website was down. However, for those of you that are in the class, you'll probably have noticed that the entry was 20,700 and the stop was below the 66 level right here. So you did benefit from this very small rally all the way into the 750. At this point at 750, 10:30 trigger time actually came with the range that continued throughout noon. So it was an extensive range at this point. It was not conducive of a very good follow through to the upside. And with that being said, you could see that the trigger happened here that came at 12 o'clock, and you see why the price has stopped. So it's not a very good risk to reward ratio without the possibility of following through. The price ran into this resistance and congestion at 20,800, also a psychological area, and also it ran into this 200 moving average on the 15-minute and also 200 moving average on the hourly chart. From the daily perspective and what we can expect moving forward, this was today's price action. What we can expect moving further is if we get a break above this 820, 800 area, and as long as the price will remain stable above 20,800 area, there is the potential for price continuation into the 2100 level, but 21,000 level. But at this point, this is the big area right here. It's coming from this prior pivot high, and that is April 5th resistance, 20,820. So anything that will stop the price from continuing higher, price can actually get rejected at this price, and the price can come back lower, revisit the 20,479. And it's actually the area that that was visited yesterday. Yesterday it was a little bit tricky to trade, and that was because we did have a continuation to the downside in the overnight session. You could see very well here that this bottoming tail triggered below this prior candle low, continuing lower into this choppy congestion that continued for over a month, for the month of, you could see very well here, so from March 22nd all the way to April 24th. So it's about a month here, very choppy conditions throughout the month of April, very difficult market environment. We literally had only 2 follow-through days for the month of April, and actually these are the days where the easy money was being made, and these were the scalping days. But however, you could see here that grinding to the downside, and then it was immediately igniting to the upside, and this upside came here due to the French election. Now, when we look at the bar that happened on Wednesday, the sell that happened on Wednesday, this was like a breath of fresh air because it was the only time when we had a continuation, a break of the support area, and shorts were in progress. So it was an easier day to trade on Wednesday. So continuing further, we can see that we're still back into this range right here for next week. So we're back into the choppy area that developed throughout April 26th all the way into May 16th. So again, a very wide portion where the price literally did nothing. So it hovered up and down, up and down, up and down without, you guessed it, a real direction. So what happens when you don't have a real direction in the market? When you don't have, well, you have higher time frames that are dictating a higher point and that are dictating a continuation to the upside because they're in a very strong uptrend. However, extended, very, very much extended from any types of support on the monthly chart. You could see very well here it's extended from the support level on the weekly chart. So this is the reason why we're getting this choppy environment. We're having a relatively rich week in economic events next week, and also the highlight of the week is going to be the OPEC meeting on the 25th. Speaking of OPEC, let's move on to CL. Oil has advanced throughout the overnight session. It was a very aggressive session. The entry, however, for those of you that took these trades, and thank you for the messages that you guys are sending me, I'm telling you, you guys are right on the money with these triggers here. For those of you that are Trade Out Loud students, amazing movement that you guys captured in the overnight session, moving higher, and again, continuation. We talked about the potential continuation into the $51 in the pre-market game plan. For this week, what happened throughout this week? So we had 3 days in which the price consolidated between pretty much between $48 and $49.50. Once we broke through this area of $49.50, continuation higher, and you could see very well here that we have a lot of room to continue higher. So why did we stop at this point? Well, take a look back. We still have a little bit of room to continue higher all the way into $51.15 because we have a prior low that is putting a lot of resistance into this point. It's also creating the price it's creating the price volatility that may be pushed exactly to this area. But other than that, if we break above this area, remember, this can also be a turnaround area moving forward. But if we get a continuation higher, the next target area is going to be into $53.50 and $54 for CL. Now, let's take a look at NASDAQ. NASDAQ continues to be the overall relative strength indice. Continuation higher. You could see very well here that we got an initial movement towards the upside for NASDAQ. However, it has been basing over here 56.60, and it's not doing anything significantly. It's usual for option expiration, and keep in mind that come Monday we will have calibration Monday. So this is after option expiration where trading becomes a little bit trickier due to the fact that these prices are going to be pinpointed at certain values. So you can see very well here that we have about a 13-point range. Any projection to the upside can take the price back into the $5700 area. Also, we have a daily trigger. That happened in the overnight session, strong overnight session, price projection moving forward into 27.25. You could see it very well right here. And there are future projections to the upside into the 5800 and 5845 continuing for throughout next week. On a possible turnaround, if the price breaks 5,600, so 5,600 is going to be the line in the sand moving forward for NASDAQ. So look for a short under 5,600 come next week. So if that should happen, if not, we're going to get that continuation higher into the targets that I have mentioned before. But if we're going to get a turnaround, 5,600 is going to be the area for the turn around to the downside, and look for a revisit of 5550 area. Let's take a look at the S&P 500 index, and the S&P 500 index relative strength as well, and it's actually the one that is the strongest today and was the one that has advanced the most. It is trading right now exactly into the middle of this congestion area. Obviously, you could see that the trend is intact. This was just a brief pullback. The trend is intact. Further continuation moving forward into 2404. However, if the price should breach this area of 2376, we can see a turnaround. So if in the overnight session on Sunday or come Monday throughout the London session, we get a turnaround and the price is going to trade below 2376, we may get a continuation lower all the way into the 63 area and back into obviously back into the 50 and back into the 44 area, the area that was visited yesterday. Last but not least, let's take a look at gold. And gold is stabilizing right here. You could see that there has been a lot of movement in price action, and these candles are not really indicative a continuation either higher or lower. You could see that they have a neutral significance. So there's literally neutral significance. So you could see that there, once the price spiked higher, was immediately brought back into the support area. It went lower, back into the support area. So what price did here is nothing else than enlarge this base all the way from 1249 to about 1256 area. So really wide range moving forward. At the same time, the price is consolidating at this level. So you could see a double bottom that formed here at 1245. And the price is trying to push higher. But if the price is going to break 1260, that's going to be the confirmation for higher. Obviously, if it gets over 55, that's going to be the first confirmation that the price is going to go to 60. So any pullback within this area after the trigger of 1255 can be looked at as positive, continuing further into the $65, into the 1265 area, further continuation into 1280 and back into these highs of 1300. All right, but if the price is going to weaken out, and if 1245 is going to be taken out Sunday, Monday, or throughout next week, keep in mind there is more room for lower back into the 1220 area. All right, and by popular request, here is the analysis for bonds. All right, here's the analysis for bonds. So like I said, and I've mentioned a few days ago when we did the analysis, we got a bull sandwich right here. 151.22 was the critical area. If that area, and we talked about if that area should be broken out, the next target area is 153. And again, congratulations for those of you that are paying very close attention to the pre-market game plans and are Trade Out Loud students and are taking these trades. Great follow through on bonds. Currently trading into a lot of resistance here at 154.10. Further continuation higher from the daily perspective into the 155 level. You could see very well here we had a pullback into the 20-pair moving average, further continuation to the upside into this level as well. So throughout the day today, you could see very well that the price has been stabilizing pretty much at this 153.25 level. It's hovering back and forth, not a very stable base, as you can see here. So the base is widening, and then it's tightening it again, and then it's widening again. So at this point, we started the overnight session 153.22 by 153.27, and we easily moved a little bit to the lower side and a little bit more to the upper side. So we enlarged this base, making the risk a little wider compared to the possible reward that can come afterwards. Keep in mind that we have a new trading class that starts on Monday. It is the Power Income Day Trading Futures class. It is a 6-day class. Starts on Monday, May 22nd through Friday. So Monday through Friday from 5 p.m. Eastern Time to 8 p.m. Eastern Time. So it's 5 to 8 p.m. Eastern Time. And we have a trading lab on Monday. And no, it's not exactly on Monday. It's on Tuesday. It's May 30th. It's usually on Monday, but we pushed it to May 30th because the Monday, May 29th, Memorial Day. So the market is going to be closed. The U.S. market is going to be closed. So 6-day Power Income Day Trading Futures class starts May 22nd. For more information on how you can register, visit our website. It is tradeoutloud.com/futures. You can find more details about our class. If you want to find out more about the class curriculum, and if you want to sign up, feel free to email me at info@tradeoutloud.com. Seats are going back fast. This is one of our popular classes, most popular classes that we're offering. And also you get 30 days to trade with us. So you were basically gonna carbon copy all my trades. If you want more information on that, feel free to email me at info@tradeoutloud.com, or if you want to sign up right away, you can call me at 810-824-7575. I wish you all have a safe and happy weekend, and I'll see you guys on Monday.